Hello, everybody. My name is Christopher Terry, CEO of iMarkets Live. I'm coming at you from Las Vegas, Nevada, and I'm out here for a little while. And right now, I'm connected to a hotel connection. So if anything goes down while we're doing this little show here, please forgive me, and we'll look to resolve it right away. So the internet connection, sometimes it gets a little buggy. I have to sign up every 24 hours, and I did that this morning, but you just never know. This is more of a casual thing where we get together and I go through my charts, stuff that I look at. And how I have it formatted tonight is we're going to go through the harmonic scanner. I really want to show you guys how to get that used and to your benefit. And also some of the things I look at. And also we'll do some chart work. We'll look at some charts. We'll look at multiple time frame analysis of those charts. And you may be familiar with this type of work. You may not. I have different models that I look at. I don't look just at harmonics. I do a lot with market geometry and oscillators and indicators. So I believe that you should have a cure for every kind of illness. You know, doctors don't just come at you with aspirin. You know, if you got a cold. So I look at harmonics. It's great, but it's not the only thing we look at. We look at several things. But the great thing about harmonics, and I tie it with market geometry, I tie it in with Elliott wave, and that's what really increases the power on it. And I want to teach you as much as I can as time goes forward. You're going to start learning more and more. You're going to learn little gold nuggets, little tricks, and you're going to see the truth. All right. I know a lot of people get out there and they're selling these crazy courses for crazy money, and they give you crazy indicators for crazy money. And iMarkets Live is not about that. You know, the worst case scenario, you're paying $500 to start, $150 a month, and you're getting all the different services. And, you know, if you look at it like that, it's a $2,000 a year business. You're getting $2 million worth of education. I'm not going to take your money and teach you for one day or a weekend and disappear. That's not my interest. My interest is to make sure that you have the best education available. You get the best chart work. You become a chartist. You start looking at the markets a little bit differently maybe than you have, or maybe it just improves what you're doing, or maybe you think I'm a flake. It doesn't matter. We're here to have a little bit of fun. We'll look at some charts and do some things together here. So what we're going to do is I'm first going to look at MetaTrader 4. I'll go through what we have in terms of the patterns that are forming. And then what we're going to do is I'm going to go on TradingView. I like their charts. I like their model. And I'll go on there and I'll do my chart work. There's a million people doing chart work. You know, it's just sometimes you find some good people. But I kind of always learning. I'm always in the educational process. And so you guys know I'm always a student to trading. You know, people become too big and too smart. That's where the downfall is. You know, I like keeping my nose to the ground. I like staying on top of the charts. I like seeing what other people do. Doesn't mean I'm going to join their company. Out there, I'm watching YouTube videos. That's just who I am. I'm always in the educational process. I'm always a student in the industry because there's some great traders out there. There's some great educators out there. And why not? Why not get little extra tips? I'm not the guy that tries to know it all. Believe that. I just more of the guy who I like to work hard. I like to find my little style, and I like to share it. Okay, we have the live room, if you haven't been in it, in the morning from 8:30 in the morning Eastern to 9:30 Eastern. We look at the Forex markets. What you're going to see tonight is basically what we do in the morning. We'll give levels, zones, opportunities, areas. We're going to tell you what you should or should not do. And then from 9:30 in the morning Eastern to 10:30, we trade the S&P Futures Index. The S&P Futures Index is designed to scalp. It's designed for you to come in and get out. You know, we hit it so hard so fast that the market hasn't even decided to move yet. We're gone. today, I think in 4 minutes from the market open, we made a couple of points. We were gone. We're happy. And I was speaking to a guy earlier today, and he said to me, "Well, how much do you make in the room?" I don't like quoting numbers. I don't. I'm just not a percentage guy. It's irrelevant. Percentages really are relevant if you think about it. And I'll explain that in a second. But he said to me, "Well, how do you do in the room?" I said, "We make a few points a day." And if you look at a few points a day, that adds up to anywhere from 150 to 4 to 500 a day. So I really keep it 150 to 250 a day per 3,000, 4,000. Now, if you look at it, it's quote unquote 100% a month, right? Or more. But the 3,000 that we're working with is really, we're using cash of 1,000. We're leveraging $200,000 worth of money. So to make a couple of $100 on a couple of 100,000, you really have to understand the leverage process. So it gives us that opportunity. So those of you that really want to be hardcore and you want to trade, really trade, please come to the live educational room. I like the model of looking at the Forex markets on a longer term basis, lower risk. I like the futures markets, higher risk, keeping everything tight and very fast moving, and you're guaranteed to have great volatility for 6-7 hours in a day. And we've had, I think, one losing day since March, and there's many people in my room. We got hundreds and hundreds and hundreds and hundreds and hundreds, upwards almost 1,000 people that follow my work. So if I was bad, believe me, the people would be complaining. But these people, a lot of them are long-term members. They don't really say much at all. They may peep it. Newer people come in and say things, but more or less people just watch, and we hit it hardcore. So if that's your game, if you really want to do something, please come in. You go right through your back office, under the trading tab, live room, sit in it, and I promise it's a game changer. It's a 17-year-old product. The scanner here, I'll get to that in a minute. The other product I want to talk about before we do anything, because I was asked to speak about it, FX Signals Live. All right, I've been pushing off a little bit, and we're almost at the time where we're going to kick it off. But I'm a perfectionist, so you guys know. I may goof around a lot with my friends. I may look like I'm not organized to some extent. I look when I do my charts, I'm all over the place, which I'm not. There's a method to the madness. But I'm extremely, extremely focused and clear upon the decisions and our future for iMarkets Live. You could not find a clearer person, a defined target than me. I put my head to it as a pit bull on a bone, and we will get it done. So right now, we just got a couple of days away. I want to take a look here at the what we have. FX Signals Live is going to be an iMarkets Live product. You can't have it unless you're an iMarkets Live member. And this will have, it'll be a Facebook wall. Let me just log in real quick, okay? Let me just log in to the back office. So if you think about it, you got a little Facebook type of wall back here. You could put links, you could put charts, really nice. Same as you do with Facebook. Actually, it has more features than Facebook. We designed this to be more features than a Facebook. And you put it here and you have that traders wall. I can't wait till we have traders putting charts and ideas. I can't wait for that. That's going to be exciting. The traders, our providers will be putting charts, but I can't wait till the average guy shines and I grab him one day and say, you know what? How'd you like to do some work with us? My focus with iMarkets Live is to find talent. I don't want to be the talent. I got other talents, but I'm always looking for new talent. If you're a guy who has talent or you want to be partnered with us in terms of the trading or education, reach out to me. Here's my email. Okay, Chris at iMarketsLive.com, and we could talk one-on-one in private. I would never release any information that you discuss with me. Please understand that. So Chris at iMarketsLive.com. If you have something to offer, and you have something to offer a lot of people, the compensation is definitely there. Okay, we're talking major money for great people. IMLs, we have some great things happening. Now, the traders area is really cool because I did a little model here, is when you log into your back office, and let's just say these are your accounts. You can click on them. You set up an account, you can click on it. Here's the master account as a model for you to take a look at. And all your data is in the back office. So let's just say you're looking at Chris Terry would be a trader. We're going to change this before it goes live. But you can look back and say, you know, Chris did 24%. And he did it on a 3% risk, a 1% risk. And you say, you know, what if I did the same thing and I did 4 times what he did? I'm aggressive. I'm young. I'm aggressive. And you look, you say, wow, you are able to look back and see the history of every trade 4 times. Okay, and you can say, wow, this would have been the history. This would have been what it was if I was following him at a particular risk model. It shows all your open trades, all your closed trades, all the information for your signal, any news that we have coming out. You can contact the trader right away. We have little questions and answers, and we have all of our performance area right here. So that's the provider. The cool thing is and look on the right here, it says accounts. You want to come in, you want to add a broker, and this is how easy it is. You take your MetaTrader 4 number, account number with FXCM or Wanda. The account name is FXCM1, right? For example, the account password is wow, whatever. You hit the add account area and it would show your information down here. And what would happen next is you then go and you look at the trader. Which trader do you want to follow? You follow this guy right here. We click here. You like the guy's trading. You hit copy. And right here, it basically gives you that information. You're good. You close it. And what's going to happen is it's going to be in your back office. All your information will be back here. Well, I'm going to work on with the programmers tonight with all this information. But basically, they haven't pushed it live yet, and it'll take a few days. We have everything. So once you set it up, you never have to set it up again. You don't need a VPS. You don't need to keep your MetaTrader running. And it's something that's revolutionary that we have done on a complete basis, that there's no other competition in the industry against us. Essentially, guys, if you're in the network marketing arena, you got the only product. Let's put it like that. Imagine you have the only toilet paper, okay? You have the only product. We have no competition. And it's lightning speed. It's at a level of lightning speed that somebody said to me, when you press the button for the master, it seemed like the client got to trade faster. We also have the live trading room right here. You could join. If you're an iMarkets Live member right now, which you are, you can go to the FX Signals Live, and you can actually join the live trading room from here. You don't have to go to iMarkets Live, believe it or not. You got emails that we send out, all the emails we send out. And again, your social wall. We got some charts if those of you like to be chart aficionados. And I just wanted to go through this real quick so you guys have all this information and catch up. I know Gerard had asked me just to spend a little time going through it and making sure everybody's on the same page. All right, so let's take a look at some charts. Let's take a look we're gonna look at the harmonic scanner, and then I'm gonna look at a few other charts, and we're gonna call it a night. So I'm not in a rush. If you're in a rush, I'm sorry, I'm not in a rush. When we get done, we get done. I've always done my night owls at the point where when we get done, we get done. I'm not one of those guys that keep it to an hour or hour and 5 minutes or hour and 15 minutes. When we're done, we're done. If you have to go. We're going to record it anyway. We'll send you the copy. So, and I appreciate every single one of you that has taken your time out of your personal life to be part of this. It means a lot, because without you, this doesn't happen. So keep that in mind. You are very instrumental in me doing this. And let's just start looking at some of these patterns here, okay? So before I do anything, I like to set up my platform here, my trading field of what I like to look at. Now, this particular chart we were looking at today in our live trading room, we were doing education. So we actually looked at this chart and some thoughts. So let me just get rid of some of this nonsense here. What I like to do is you got your scanner. It's nice. Fine. What I want to do is let's throw in some other information. Okay. So we go to the navigator. I go to the navigator and I take the MACD and I click on it, right? When I click on it, we're going to drag it over. And it shows a default of 12. We'll make that 3. 26, we make that 10. And 9, we make this 16. So you have a 310 oscillator with the 16 smooth, okay, with the signal line. 310, 16. If you don't catch it the first time, just again, I'm going to record this and we'll send it out. I go to the color area, I make it blue. I just like making my charts red, white, and blue. That's what I do. So we're now looking at our oscillator. I also like to throw some Bollinger Bands. I like to throw the Bollinger Band. I like to throw a 50 in there. And I throw a 5 on that. And I take the Bollinger Band again, and I throw a 4. And then I do the Bollinger Band again. I do a 3. And then I do the Bollinger Band one more time, and I do a 2. Okay, so we have our Bollinger Bands within our setup right now. I like to look at the Bollinger Bands because here is the moving average. This is considered the mean. I've now modified the Bollinger Bands, and now we have standard deviation bands. The Bollinger Bands are basically standard deviation bands. It's just that John Bollinger decided to call them the Bollinger Bands, and he put a 2 standard deviation around a 20-period simple moving average, and he sold books, period. I'm not sure how good of a trader he is. I'm not sure if he even knows how to trade. Who knows? But John was smart enough back how many years ago to look back and say, you know what? I could take these standard deviation bands, put a certain number around them, and call them the Bollinger Bands and sell bucks. Good for him. So you're going to find I'm pretty vocal, that I know all these people in the industry, and that's, some of them sell books, some of them actually know what they're doing. So he's a good man, but who knows if he, his reasoning. But basically, standard deviation bands. I knew his original partner, so you understand, and his original partner had educated me on doing other things with standard deviation bands, and at levels that are just amazing. So as we go on with our night owls, you're going to have a lot of education with that, these standard deviation bands and other things and how they work. The market tends to get away from the mean in a range and tends to come back to it. So eventually we're looking for this price to come back to the mean. The mean is the moving average. So these are standard deviations away from the mean, and you expect them to come back. What I like to look at is I like to look at markets that are in a downtrend for a short, uptrend for a buy. So let's take a look at the NZD USD 4-hour. So let's just change the chart. Let's just come over here, not on that one. Let's go here, NZD. And let's just take a look at the daily. Okay, we see what's going on. I like to look at the higher time frame, and I like to determine what's happening on this higher time frame and what's important. So I take a look and I say, well, here we go. Okay, this right here, let me just get rid of this like this. Hold on a second. Let me actually do this, guys. Much easier to do this. Okay, watch. NZD. I use this on TradingView. It's a much better platform for me to do things than it would be MetaTrader or Ninja. This happens to be something that we looked at on the pullback on the NZD USD for a buying opportunity in our live trading room. This is something we were actually looking at. All right, so let me just get rid of this. Okay. Let's look at the higher time frame. Let's look at the weekly chart. Same chart, right? Just the same chart as we have with MetaTrader. All charting platforms are the same. It's just whatever, pick your poison. Okay, there's so many different platforms out there. You don't have to be regulated to one. Let's take this to here. Okay, I'm going to format this a little bit. And let me just fix this. So the NZD USD has had a swing up, and I want to clone this. I'm going to take it and put it down here. Okay, so what's this telling you right now? This is telling you that it's reaching roughly around the same degree of length in terms of the prior swing. What we're also looking at is if we were to take in consideration Elliott wave, we could see that the market has made a huge move down. So if we were to consider this in terms of an Elliott wave, it's always in 5 waves. And typically when you have that swing right there, that 1 to 2, you get that next move down. That 3 to 4 should emulate, all right, it should emulate the prior swing. So if we look at this in terms of an Elliott wave, we have what's called a 5 wave, 1, 0, 1, 2, 3, 4, 5. The 3 to 4 swing will typically look like the 1 to 2 swing. This would be, if you took a look at it on some black and white chart, you would have this type of, it would look the same. This is a trend down, lower lows, lower highs, but we're hitting a point of resistance that the market is going to identify. I also take the swing high of 2 and I draw it down to 3 and I put in my retracement levels. And I'm doing this on the higher time frame. You see, there's plenty of time to do this on the other chart that we were just looking at. Okay, let me just show this. There's plenty of time. You have an hour, 2-hour chart. Why not take a few minutes and just identify the higher time frame? If we identify the higher time frame here, we could see that if I extended the lines out, that what's happening. All right, let's just take a look here. What's happening? We see that the market is hitting a point of price relationship. Okay, the 4 and the 3 to 4 is equal to 1 to 2. And also you have a retracement from 2 down to 3 up to 4. I'm sure if I pull this one, I think the retracement may be a little bit deeper. Here it goes, actually. See the 24%? I take the market from high to low. And now what I'm doing is I'm lining up reasons of why this market is resistance. So if I take this line across here, this, and change this and make the format a little bit better. Okay, if we take a look and we look at this information here, let's just talk about this a little bit. We took the market high to market low up 24%. We took the lower high down to the lowest low up 38%. We took the 1 to 2 and 3 to 4 and we did 100% emulation. And what's happening? The market is hitting the zone right now. And we're still looking for that 5th wave to go down. This is a weekly chart. This is a high time frame. Okay, what are the conditions that happened prior? Don't worry about it if you're a new trader. Don't worry about it if you're new to the markets. This is where the rubber meets the road. This is where you're going to become a professional chartist, a professional analyst, and a professional trader. In our live room, I make you a professional trader. Here, I'm going to make you a professional chartist. All right, I can't do everything for you, but I'm going to give you all the tools necessary for you to be successful. All right, so you got a nice retracement in this zone, and this is telling you resistance. Okay, so if we were to kick this down a little bit and we would take it down to a daily chart, what would it look like? right? You see we're coming into the zone here. We also can see, if we would, just to take a little time, we could take a look at an XABCD pattern, which we know as harmonics. Market had this, had lower low, and you had the 886, right? Watch. Okay, that's one part of it, or 89. Then we come here and we could see here, 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 all right, it's basically a 1.13, right up in here. Okay, so there's other things we're looking at, but here's at least one of them. And we can see that the market is creating this corrective wave, this XABCD up into this resistance area. Now I ask you, you come back and look at the chart. On the 4-hour chart, we understand now that it makes sense that we could look at this. Now, I call it a deep bet. I have my own ratios that I added because, so you understand, the guy who wrote the book, Harmonics, there's two guys who wrote books, and they sell books, all right? One of them sells books, the other ones, they both sell books. But there was another guy who was instrumental in harmonics. His name was Bryce Gilmore. And Bryce Gilmore was responsible for creating the butterfly. And essentially he said, look, in his books, I got his books, he said, as long as there's enough binding geometry where X, A, B, C, all this comes together, it's a trade, okay? It's valid. But there's only so many patterns you can put together and sell also, right? So, however they sell books, we trade, okay? So I look at that, all this data on the chart, and I start looking at where resistance can come in, all right? I'm looking at one thing. There's, this is also a sharkish type of pattern. But right up in here, I'm comfortable at looking at the short side on the New Zealand dollar, NZD USD. I'm comfortable looking at that, knowing that there's big resistance above and that we're hitting zones here. I put my standard deviation bands, and this tells me the market can still go up a little bit up into this zone. Okay? It still tells me the market can still go up into that zone. Now, if I take this down to an hourly, we would still have that information. Okay, good. So now let's break this down. We're looking at the 4-hour chart. We know that the daily and the weekly are basically telling us that the market is in big resistance up here. And all we're doing right now is looking to where the market shifts its momentum from going up to down. Bigger picture, you could just short the market and feel good with it. Let me tell you something. Some people talk about this market maker mumbo jumbo. If you actually think that a $1 billion banker is going to sit down at his chair and think about you at 3 o'clock in the morning, you got another thing coming. All right? Bankers trade differently than we do, period. They don't play with Fibonacci. They don't play with these little zones. They don't do that. I have friends that are bankers. I got into business because of a banker. Big trader bankers. I'm talking $50, $100 million guys. They're making 30, 40, 50 million a year. These are friends of mine. All right. That's the world I've lived in. These are big, big players. Even if they're making 5 to 10, that's like peanuts in New York City and in the big trading world in London. A guy's making $10 million a year as a piker. Okay. He's like minimum wage. I'm talking real money people. These guys don't sit and they're going to move $100 million or $1 billion in cash around off a Fibonacci level. They just don't. So what they do is they just put money to work consistently. If they feel the New Zealand dollar is going down over the next 1 to 2 or 3 months, they just start feeding it into the market. They don't want to move the market in one shot. They're very careful with that. And they just throw it in layers, okay, over a period of time. So the fact that these guys do that and the markets are so just so volatile, it creates these little patterns. It's just a phenomena. Okay, believe it or not, this is just a phenomena that they create these relationships. Nothing more. There's no guys that are saying, okay, it's going to stop it at 38%. It just happens. It's a phenomena. You, myself, or any banker or broker or anybody can't literally stop the market right here. And yeah, it's a self-fulfilling prophecy. Enough smaller people see it, support comes in. But the big bankers, they don't care about us, man. They're just doing their thing. They're happy. So what we want to do is go with the big bankers, go with the big money. Where's the big money? Okay, if I was to ask you where's the big money playing, you could just best believe you could look at these higher time frames and say the market's on a trend down. Period. There's no, these guys will get in here, put $1 billion to work, and just shave it off. That's what they do. All right. So let's get back down to the hourly charts. Let's get back down here and let's look at the MetaTrader. So when I look at the harmonic scanner, we have enough time. It's a 4-hour chart. This doesn't mean jump in and take a chart right here. It doesn't mean I got to get in right here. If I don't get in right here, I'm going to miss everything. Don't do that. All right. Be patient. Nothing is such a rush. If something is such a rush, then you need to work on you. You need to work on your own mindset. Nothing in the world is such a rush, man. Pretend with the market is you are waiting for your wife or your girlfriend to get ready for dinner. And you're sitting there going, come on, I got to go. And they're sitting there going, I'll be another minute. And 20 minutes later, I'll be another minute. All right. Have the patience of Job when you're trading. And if it falls in your lap, an opportunity, you trade it. If it doesn't, you leave it alone. You work and you work as a professional. Never work under stress. So if we look at this pattern right here, okay, if my dog barks, guys, I'm going to apologize, okay? So I like to look at the lower time frame. Let's look at the lower time frame, all right? And let's open up the chart here a little bit. Okay, let's just open up the charts. This is how I do my charting. This is what I do. I'm showing you exactly what I do. I'm not hiding anything. I'm showing you exactly what Christopher Terry does all the time, all right? So we know that the market likes to go in waves. 3 little pushes. One, 2, 3. Market moves 3 little drives to the upside. Typically after 3 drives, and you got a divergence here, you can see lower highs on the pushes up. Typically after you get those 3 drives, the market likes to correct itself. I don't particularly like to wait and short it right there because it's still in an uptrend. I like to let the market break a bit, let it break a bit, let it maybe come up a bit, and then I start working a position. I don't need to be the guy, and you see this on Facebook, right? You see the guys, they're shorting the high right exactly there, and they're posting all this stuff. Don't do that. You know what? Many times these markets keep going, and you short them here, and you get blown up, and you short them again, and it's not fun. It's not fun losing money. I don't want you to lose money. Be patient. Let the markets shift their momentum from going in a direction and then shifting. You don't need to be the guy that shorts right there, believe me. An extra 5 or 10 pips or even 20 pips is meaningless if you're looking for 100 or 200. Think bigger picture when we're trading, right? You want to think bigger picture. So if the market was to break here, you then start looking at the little retracements up. You're looking at a shift in momentum. Shifts in momentum. That's all you're looking for. You're looking for the market to stop going up and change direction. That's all you're looking for. So right here, right now, the market's still going up. The higher time frame, let me just get back up here. The higher time frame is saying that there is a harmonic pattern forming. We're very, very close to the range. And my whole thing also is, so what? Maybe it doesn't get up there. Maybe this is it. If it doesn't hit here, it's okay. Many times the market, these harmonic patterns will just shift their momentum and fail to do it and then start turning. You want to be on top of these things, just knowing and watching for these zones and keeping an eye. Here's the zone you want to watch, But if it falls short, it's okay too. You always want to just wait. So on the NZD USD, we already know that the higher time frame is a sell. It is, right? The higher time frame is a sell. It's just a matter of the shorter time frame stopping to go up. So if you're a higher time frame player, you start shorting now because you really don't care about that little 20, 30, 50 pip swing because you're going for hundreds and hundreds. You're a higher time frame guy. You just go into the market. You just start putting in pieces. Maybe put 20% of the trade, goes up higher, layer in another 20%, just like the big bankers do. They don't put all $1 billion to work. They'll put 100 million. They'll put 200 million. They'll layer it in over a period of time until the market starts to shift and they start putting heavier money when those market shifts. So you got to think like the banker, all right? Think like the trader. Think like the big guys, not on Wall Street, but think about the big traders. So I use a lot of trend lines. I wait. When this market shifts this momentum from up to down, I'm going to start working the short side. It's obviously telling you it's losing momentum. It's obviously telling you on the price that you're way up in the air. That's what I like to do. So if that makes sense to you, let's go to the next chart. Okay. EUR-NZD. Okay. EUR-NZD. Now, I have to look at this and decide, do I like this or I don't like it? Let's take a look at the higher time frame. Okay, let's take a look at the higher time frame. The higher time frame says that the market has rallied and is now pushing down in terms of a retracement pattern. If we look at the daily chart, we're getting this XABCD down, this Gartley pattern. And let's take a look at the other platform. All right. What I also wanted you to notice here is it's getting divergences. What I also notice, and I'm going to draw this out on the other charting platform, is price went sideways here for a bit and they broke to the downside. Still feels like it can go a bit lower. I don't want to buy them just yet. I want to see a shift in momentum. All right. So let's take a look at the other charting platform at the EUR-NZD, right? Is that what it was? Let me just double check. Okay. Okay. Now, a couple of things. In terms of harmonics, let's hypothetically say that this is your zone to buy. All right. I just want to get a couple of things off the table. Let's get a couple of things off the table, and let's just say, hypothetically, this is your buy area, and that is your risk. Okay. And I really want to make sure you guys understand this. And I have videos. I have videos on the internet. I also have videos in your back office of entry techniques. Real important. Entry techniques are real important. You want to, let me just get a trend line here. Okay, black trend line, good. Okay, couple of scenarios. All right, couple of scenarios. Number one, let's just say we're looking at this. Okay, we're looking at this. The market's on its way down. What the? Okay, market's on its way down. Then it had its rally, and now it's coming back down into the zone. I wouldn't necessarily do anything right here. You want to be patient. You want to let this market see if it can come down. If it does, if it finds support, if it turns up, great. When it turns up, you're then looking for that test down again that's going to hold. You do one of two things here. Okay, you do one of two things. You're either buying this retracement down with the risk below, or you're buying above this point right here where the market is going to give you an opportunity to enter into a trade. So the process that you want to see is you want to see the market stop going down. So you're pushing into a zone, it holds, it runs up, pulls back, high or low, you can do that, or you can buy the breakout above. There is no, it's either one or the other. That's up to you. If for some reason the market right here has come down, and let's just say a real life scenario, the market's right here, and starts to trend up, it says, okay, that's support, going to turn up. You're doing the same process. You're just looking for that market. Okay, you're looking for that market to turn up, even if it goes higher. It's okay. All right. Even if it goes higher, it's okay. All right. But you're looking for the market to stop going down. You can either buy it here with a risk below, or market turns up, and we know what happens if you're looking at an hourly chart. Your 15 minutes is doing like this. Okay, your 15 minutes is doing like this. So if your 15 minutes is doing like that, you can work shorter term entries. It's all about lowering your risk and letting the market stop going in the direction. You see my pen stopping? That's weird, huh? Look at that. That's weird. You're looking for the market to stop moving, comes down, bounces, comes down, up. Okay, whatever that's going on with the pen, tell you what, I'm going to erase the drawings. I don't need you no more pen. Bad pen. So you're looking at either A, market comes down and it shifts momentum. Either shifts momentum like that, and you're looking just to buy the pullbacks, or if you get a deeper push down, you're just waiting for the market to stop. So in this regard, let me just clean this up a little bit, remove drawing tools. All right, we'll look at a couple more. We're gonna go till about 8:30 really. All right. I just want to get more down in terms of entry techniques, and we'll go over the next half hour. I'm going to speed things up a little bit. But I like teaching on night owls. It gives me my freedom to sit back and just educate you guys, you know. Not necessarily worry about the charts, but just looking at all the different opportunities. So let's take a look at the higher time frame, at what's going on with the markets. So it seems that the market had come off this big high, and we can take our retracement zones, and we're coming into a 38% retracement. All right, markets can still come down a bit deeper, fine. We're getting that daily harmonic pattern as we just looked at, okay, which is this. We just looked at this on the scanner. Okay, you're looking at this on the scanner right here. I believe that was it, right? Am I correct? Something like that. And it's giving you a zone. I see a 38% retracement. That's fine. But I'm also looking at the fact that this market has come out of a sideways line. Let's take a look. Okay, here. All right, let's go 3 hour, 4 hour chart. Here it is. Doesn't matter. 2 hour chart. We see that the market came out of a sideways line. All this right here is balance. Market was very balanced in there and started breaking. Started breaking to the downside, and it's telling us that the market still may want to go down. So I like to look at things in terms of an Elliott wave. I just always do. Market high, market low. Okay, pushing down. So what this is telling me is, yes, the daily is saying that this is a buy. The New Zealand dollar EUR NZD is a buy because the market high, if you look here, 0, 0, 1, 2, lower high, drive down 3, 4, potential 5. In this little minor swing, I want to show you something here. In this little minor swing, it's interesting because this little minor swing had its own little Elliott wave. You see this? its own little pattern in here. What that's telling me is the market is being very orderly. All right, market's being very orderly. So the fact that this did like this, you had your 1 to 2, 3 to 4, pretty much that same uh, relationship that we looked at on the other chart, that this should start to push a lot lower. That being the case, that what does this tell you? This tells you that don't go ahead and buy yet unless it gives that shift that I told you, that potentially this can do this. Okay? So if you understand wave analysis and you understand what the market potentially can do, you're going to be more clear and defined on your patterns. Now, ask yourself, if you're a guy that wants to buy this pattern, knowing that this is just coming off of this last swing down, well, this can continue to go for a while and still maintain its integrity in here. Okay, it could still maintain its integrity here and not even stop out. Watch. Okay, there's nothing saying that the market, that this market could not come into the zone deep. Oops. All right, and then shift this momentum back up again. There is nothing saying that it can't do that. If we look at this market is in an uptrending market. You see that? Uptrending market, and you're looking for that correction, that pullback. What if this wanted to do a bit further of a move down? Okay, maybe it does like a butterfly type of thing, or it does more of an extended leg down. You just want to be prepared. So you're looking at the hourly chart, and the hourly chart's telling you we're still in a downtrend on the hourly, but you're in a buy, an uptrend on the daily. You have to let the smaller term charts play out. You have to allow them to play out. So market comes down, let's just say right here, it shoots up. Okay, let's just say it shoots up from here. Then does that higher low. That's why I'm saying you look for the higher low to start the process of the market shifting. You're always looking for the market to shift its attention from going one direction to the other. Our job is just to monitor it. This is what's called price action, not some of the ding-dong stuff that you see out there. This is price action. You're reading price action. This is price action. 1 to 2, 3 to 4, that's price action. 2 to 3, 4 to 5, that's price action. Waves within waves. You're looking at what the trend is. That's price action. You're looking at the market went sideways for an extended period of time and created what's called a sideways line. That's price action. You break into the downside. Price action is telling you that the shift in momentum went from sideways to down, and there is nothing saying that this is stopping going down anytime soon. So what we're doing is we're looking for this market to come down deeper, but we're also cautious that this is still in an uptrend. And what if it holds here? That's why you use a lower time frame and you start looking at shifts of momentum from going from down to up to down. That's reading price action, not the market makers going sideways, spikes you out the other way. That's not price action. This is price action. I've been doing this over 20 years. Believe me, price action. All right. We got so much stuff to teach you. I'm telling you, you're getting a multi-million-dollar education. I plan to make each and every one of you who stick with us a beast. I have nothing better to do, man. I'm in Las Vegas. I'm enjoying my life, and my life consists of iMarkets Live and helping its members, those that want to make it. I'm all there. I'm all about you guys, all right? I'm all about calling BS on the industry also, whether it's trading or the other business. And right now we're talking about trading. I've seen all my competitors in the past and things that they've said and done just make you laugh. If you understood some of the things that these other gurus, what they say, their attitude is, and I'm being straight with you guys, they'll charge you $5,000, $10,000, and their attitude is, hey, might as well give it to us. They're going to lose it anyway. When that guy said that to me in the New York Marriott in 2013, in February, I immediately opened up a company to go after him to put him out of business. That's how I play. How dare you hurt people? And he's a very well-known guy too. All right. So bottom line is, guys, you stick with us. You follow. If you don't understand it, don't worry about it. We're going to do this over and over and over. And if you're in the live room in the morning, you're going to get a multi-million-dollar education and you're going to make money with us. We have other people coming aboard in the future. I'm very, very cautious of who I surround myself with. I don't just surround myself with anybody, guys. They got to be top, top, top performers because you guys, you're putting your money at risk. Make sure you know one thing. We respect that totally. So let's take a look at some more charts. Okay. I know you came here to get some analysis and you get more than you expected. So, but that's okay though. That's what we do, right? We tell the truth. So EUR NZD, we talked about that. NZD CAD, what's going on here? All right. NZD CAD. Let's talk about what's going on here. All right. I got my golden retriever next to me. She's happy. Okay, let's take a look. We got the NZD is a bat pattern. We're pushing up into the zone up here, and let's take a look at why this is a bat pattern. I don't particularly like the spike. I'm going to leave that alone. All right, I'm going to leave that alone. All right. Like I said, look, some of these markets, they fall short. You know, that's a good thing. Let me tell you something. That's a good thing if the market falls short of an entry and shifts from going down to up. Believe me, that's real good. You want that, okay? I have no problem with that. When you see a market that stops, that can't even hit its ratio and holds and spikes and is putting these little double bottoms down there, okay? Little double bottom here, okay? See this? The double bottom, 2 tests create support. In the technical analysis industry, so you understand, I know some of your groups do that. Test down, holds. Test down, holds. This is considered support. That's support. Some people think that the bottom up and does something, that is technical support. This is technical, what we call a double bottom or a double top or lower high. All this area would be resistance. So keep that in mind. All right. So let's, I'm going to take a look and see who's saying what. Hopefully you're not cursing me out. Yeah, Mike T. He's like, I'm going to be the man. He disappeared. Love it. I'm going to be a millionaire. He disappeared on me. Mike, come back 20 minutes ago. Okay, it's all good. Let me see who else we got here. We got a nice group of people. Guys, I appreciate everything you guys are doing here, and you're with me. Do anybody have any questions? And know that any questions you do have, they're going to be posted. They'll be showing in the public. So if you have any questions, ask them. I'll see the little chat box. I can look at any of the markets you want. But really, my goal tonight was to teach you about entry techniques, number one, to introduce you to a little bit of an Elliott wave, harmonics, showing you that they work together really well. Show you also that I'm in the wrong charting thing here. Okay, there we go. So let's take a look at the GBP USD. I got some good stuff here. I like what I'm seeing with the GBP USD. So let's take a look at this. In our live trading room, past couple of weeks, we've been looking at this whole area down here. We were looking at this whole area down here, and in our live trading room, we saw that the market rallied up, and this right here, you can just see the chart, put a higher low, and now has impulse. And what we were looking at in our trading room was the fact that all this down here is balance. Okay, the market's in balance. Market likes to go from balance to imbalance. It just does it. All right, balance means the market's relaxed. It's not going anywhere. And we start looking at support on the higher time frame. And what happens once the market finds key support? We start looking at that 5-wave process that we just discussed. Watch. Market goes from low, up, higher low, shift up, okay? Shift up and down, and then up again. Now, here's the thing. This right here should go a lot higher. I'm expecting that to go a lot higher. Not in one wave, but a lot higher. And then this pullback right here should be shallow enough, and we go. So knowing that the market can still go up, what I want to do is look at, and this is a higher time frame. Okay, so we're going to say it's a higher time frame, and we're going to call it this. Okay, that's that higher time frame. That's this. This daily should take off to the upside. Well, how do you get in? All you're doing now is you're looking for small retracements. You're looking at little corrective waves. A lot of times you'll get ABC corrective wave. Market go from high, it'll put a lower high, and it'll retrace down a bit. This is where a lot of these harmonics waves come from when you get that. Right here on the GBP USD, all this right here is structure. Structure. This is equivalent to concrete floor below you. Right here, first floor, second floor. So potentially this can come all the way back down to here or even deeper. It's okay. All right. You may get that. You may get something like this. You don't know. The thing is, all this is structure. Okay, the market should hold this whole area. Most likely it won't be as deep. Do something like this. All right. And that's what you're looking at. You're looking at some kind of a retracement. You don't want to buy up here. You don't want to short them because it's so strong. You want to allow the market to retrace. You want to allow the market maybe to have so many pips to the downside up and that equivalent type of pippage to the downside. All right. If you take a look here, guys, right here, look at this here, here. Okay. All this right here is equivalent type of structure. All these moves here, they all relate in degree. Let's take it right here. Take a look here to here, and from here to here. Okay, they all relate in some degree. Market likes doing that. Same thing here. Market's coming up. Trust me, this is going to want to try to do the same exact move to the upside. It likes to relate to prior swings. That's what the market does. Here's another one. All right, here's another one. You see, they all relate in degree to each other. That's just the way the market works. So our job right now, looking at the GBP USD, is for let the market contract a bit. Let that happen. So we went over some good charts tonight, and if anybody has any questions or anything, otherwise we could just start wrapping it up in the next few minutes. But I really wanted to spend a nice little amount of time with you and go through some charts in this little night owl. Does anybody have any questions or comments or anything that I can offer them to help you guys? Otherwise, we'll end up wrapping it up. We have the recording. We'll put it together. We'll send it out, and we'll get things going. And then Sunday we'll do it again. Okay? Any questions? Question is, no question. Thanks. Like learning a new language. Immersion is the best way. Okay, good. All right, good, guys. Look, if there's anything else I can do for you, just I'll see you guys in the chat room. Let's give a little minute or so. Somebody may have a question. Don't be shy. It's okay, man. All right. So what I'm going to do is I'm going to wrap it up, and then we'll wrap up the recording. We'll send the recording out, and that way everybody has a copy of it. All right. And just make sure everybody's just happy, and that's about that. All right, I'm going to wrap it up. I'll see you guys soon. Okay, rock and roll. If I knew how to end the webinar, that'd also be cool. So I guess we're going to do this. Hopefully we can save the recording. End the webinar for all. There we go.